And in our top business story, the Board of Directors of Abu Dhabi Securities Exchange has approved the enforcement of new regulations for its operations, including trading, clearance, registering and depositing of security certificates. In a press release, the ADX said the new law is aimed at strengthening the national economy, maintaining growth, adopting best practices for stock markets and providing high-quality services to investors in line with Abu Dhabi Vision 2021. The board made the decision at a meeting chaired by Chairman Hamad Abdullah Shamsi. The 73 articles of the new law regulate operations conducted on the exchange as well as procedures for managing confidential information about investors and clients, defining the rights and liabilities of parties to transactions, and storing confidential information about securities ownership transfers for at least 15 years. Nakheel has announced a net profit of 2.83 billion dirhams for the first 6 months of 2015, which is an increase of nearly 1 billion dirhams or 53% on its first half 2014 profit of 1.85 billion dirhams. According to a statement from the developer, the sharp increase is mainly due to continued strong performance by the company's development business, with ongoing handovers of properties to customers. Additionally, it was stated that Nakheel's growing retail, leasing and leisure businesses also contributed to the overall financial results for the first half of the year. Nakheel continues to focus on completing various development projects currently under construction, as well as expanding its retail, hospitality and residential leasing projects to further contribute to the growth in Dubai's real estate market and to further strengthen the overall financial position of the company. Commenting on the results for H1, Nakheel Chairman Ali Rashid Luther said that the company will build on these results during the second half of this year and remain committed to playing a key role in contributing positively and effectively to Dubai's real estate sector. He added that the strategy of continuing to create more cash-generating assets will further boost the business and financial results in the coming years. And First Gulf Bank, the third largest lender by assets in the UAE, posted an 8% rise in second quarter net profit on Sunday, with performance bolstered by growth in new lending and a drop in bad loans. The results continued a run of positive earnings for UAE lenders during the quarter, with 6 major lenders now reporting higher profits. First Gulf Bank made a net profit of 1.45 billion dirhams for the 3 months to June 2015, compared to 1.35 billion dirhams in the same period a year ago. Loans and advances grew by 16% to 148.9 billion dirhams at the end of June, compared to 128.2 billion dirhams in the year earlier period. In comparison, overall UAE bank lending rose by 8.8% in June, which is its highest rate this year, according to central bank data. FGB's performance in recent quarters has been aided by a general improvement in the amount of provisions it has had to set aside to cover bad loans as the local economy has rebounded. That trend continued in the second quarter as provisions dropped 34% on an annual basis to 258 million dirhams. For the first half of the year, the bank's non-interest revenue remained a solid growth driver, with its contribution to total operating income reaching 31% at the end of June, and its core fee income strengthened by 9% on an annual basis to reach 978 million dirhams. Hotels in the capital reported a muted performance last month as a result of Ramadan, as well as an increase in room supply. The average occupancy rate dropped by 10.2% to 60.9% compared to the same period last year, according to the research company STR Global. The average daily room rate also dropped by 3.7% to 389 dirhams 42. These pulled down the revenue per available room, a measure of a hotel's profitability, by 13.5% to 237 dirhams 26. STR Global attributed the decline to the slow Ramadan season. Additionally, the number of rooms in the capital increased by 6.6% compared with the same period last year and outstripped the demand during last month. According to real estate consultancy firm CBRE, the increased room supply in Dubai and Abu Dhabi has put pressure on occupancy and room rates, but both markets are resilient, with CBRE noting that many hotels in both Abu Dhabi and Dubai were able to offset this loss in room revenue by improvements in its F&B performance, such as providing larger iftars with slightly higher rates.